All right, what's up, YouTube? What's up? I'm back with a new video. This is my third one, and if you haven't seen my other videos, please go back and watch it so you'll be able to catch up. And today we're going to learn about stock analysis, and what that is letting you know if that stock is tradable, hold a position for just one day, or if that stock is investable, hold it for months or years. So a downward trend will pretty much be a downward slope, and that stock will follow that downward slope. And that downward slope, that line right there, as you see, the downtrend, that will be the ceiling. It will never break through it. If it does break through it, don't be fooled because it just might keep following that downward trend. Okay, and the upward trend is the same exact thing, except it's the opposite. Sometimes these stock keeps running up, but sometimes they run out of room and they top out, and these stocks tend to break down. And a head and shoulders is pretty much how the picture describes it. It's a head at the top, and the shoulders for your left and right, and you have the neckline. And pretty much every time a stock does this pattern, it falls. So make sure you're watching out for that. And a support, think of support as a trampoline. Once a stock hits support, it's gonna bounce right back up. You can test this theory out. You can put your lines, but it's gonna bounce back every single time. Resistance, think of resistance as the ceiling. All right, say if you're jumping on a trampoline in a house, you jump to the highest and you hit your head on the ceiling, that's your resistance. You cannot break through it. All right, so stocks tend to break through it sometimes, but they fall right back down and hit support. And a breakdown is pretty much is going to test those lines at the bottom. As you see, this is the floor. The green line is the floor, and if it keeps trying to touch the floor, it's going to break through. And that's pretty much what a breakdown is. A breakout, it's pretty much, as you see, it keeps hitting resistance, but after it hits resistance and somebody starts bidding that price up, you start to see a breakout, and who knows where that price may go. It starts to set new highs. All right, and how to use a price level. It's easy. The only thing you're doing, you're putting the line on top of the candlestick, the actual stick. So you put it on top of the stick and at the bottom of the stick, and that pretty much carves out the prices for you. And earnings per share lets you know how good the company's doing. If the EPS is negative, it's letting you know the company's losing money. And positive is letting you know the company is growing. Growth, that tends to interest huge investors, big investors, billionaire investors. All right. Also, we have analyst upgrades, and the analysts, they tend to upgrade these stocks off of their reasoning. They would say, we see a lot of growth in this quarter, so we're going to upgrade this stock to 120 when the price is $90 and things like that. It's things that you see with Apple. Analyst downgrades is the same thing. They say, we see negative growth next year on such and such reason. They downgrade the stock and give it a reasonable price level for them, at least. And this is just an example of the analyst stock upgrades. And this is on the internet. You can search it. I'm pretty sure there'll be the downgrades and upgrades. You can find them on Yahoo Finance. Okay, we're down to the really good stuff. This is the news apps. And the news apps tend to keep you up to date with the world and with the market as well. So if you can read an article that can help you make a couple $100, hey, go ahead and do it. EBITDA. EBITDA is something that you would have to do further research on. That's not something you'll be able to just read one sentence and understand it. There's a whole process to understanding this acronym. Also, beta. Beta lets you know if your stock is going to move with the market or if it's going to move against the market. So if the market is down today and you see a stock that you want to invest in or trade and it's down for the day, I suggest you short it. Okay, and we are at market cap. And market cap is just a simple formula: stock price times the number of shares outstanding, and they'll give you the market cap for that day or for the stock that you like or you would like to invest in. It's simple. And these are more terms like the low lets you know what was the lowest price it closed at yesterday, or what was the highest price it closed at yesterday, or what's the high for today, or what's the year high, which you see is the 52-week high. That lets you know what is the high for that year or the low. And some more terms, stock rally, it's just letting you know the stocks are soaring. The market's green, everybody's making money. And a stock sell-off is letting you know the shorters are rallying and stocks are turning negative. And year to date, just let you know pretty much year to date. Dividends are just paid through the company. They're giving those shareholders some parts of the profit for being loyal shareholders. And these are just examples of what we just talked about. All right, so that concludes the lesson for today. And if you missed anything or if I didn't touch up on anything, make sure you go back and screenshot that, study that, Google it. Investopedia has some really good examples and videos to help you understand it even more if you didn't understand from what I was telling you. I'm going to start posting more videos, but I will post one every week. Sometimes I might post one in the middle of the week, so be looking out for those. We're going to start getting to those penny stocks. We're going to start getting to blue chips and maybe options if I'm able to understand it in the course of a month. And that'll be pretty much it. I know, don't be afraid. Don't be afraid to open up a brokerage account. I know you're scared to lose money. I know you're scared to lose it all. But in order to make some money in this market, you're going to need to lose some or you're going to have to take some risks. There is nobody who day trades or invests and wins every single time. You're going to have to incur some losses. And that's just something to think about. You don't have to open up an account now. You don't have to rush into it. Believe me, there are always going to be those high flyers or those stocks that jump 100% or 85% in one day. Believe me, they happen just about every other day. And if you miss them, there's going to be another play. Okay, if you have not hit that subscribe button, please hit the subscribe button. These are free lessons I'm giving away for free. So if you want to keep learning more about the market, want to learn how to invest, how to trade, please hit that subscribe button and you will learn a lot. Thank you so much.